Hi, everybody. I'm Kyle Lekai. Welcome back to another edition of VCTV. We are super excited to have you back for another week packed full of episodes. Last week, we went through everything and anything. We talked about gaming. We talked about entertainment. We talked about esports. Then got into artificial intelligence, machine learning, data, to manufacturing, supply chains, logistics, and everything in between, if you can imagine that, and leading all the way up to just the general what is happening in the investment landscape with some of the greatest investors in the world, sharing their views and insights on what was happening. But today, we're here to talk about two very impactful industries: fintech, blockchain. These are things we talk pretty regularly here. They tend to come up in almost every conversation we have on VCTV, but today is solely focused on them, their impact, and where they go in the future ahead as we look towards the digitization of the next 10 years ahead of us. Now, if you don't know what's all happening in this space, a quick headlines that we may get into it today. We've got Ethereum 2.0, big, huge infrastructural release coming at the end of the year. We've got big announcements on the US front around crypto and crypto custodies. Decentralized finance is pushing towards $4 billion when only 30 days ago, it was locked in around $1 billion locked away in total value. Huge growth seeing in that sector. Asia put out a ton of news around not just China, but also Singapore with JP Morgan's Project Ubin being launched commercially. We also had Thailand and many other countries come out with their CBDCs, or central bank digital currency projects, or full-fledged, we're going to skip it. Let's move on to just digital payments and see where things go projects. We also have so much else happening around tokenomics. We saw Dr. Seuss come onto the blockchain. Lots happening here, lots to talk about. But before we get started, like we do on every show, thank you to our audience for tuning in. At any moment today, if you have any questions, comments, concerns, drop them in the chat. I'll do my best to bring them up in real time. If not, we're all available on 24/7 social media. Be happy to hear from you and be happy to further the conversation. If you yourself as a founder would like to be on our show, every week we host Startup Leaders Club. Would love to have you share your insights, your lessons learned, not just during the past 6 months, but what you have done in your business, whether it be to business models, fundraising, sales, marketing, anything you'd like to share with the audience. Investors that are tuning in, if you'd like to be on today's show or shows like this and share your insights, open up your thinking and where you're seeing things go, reach out to myself, to the entire LA Token team. We'd love to have you. Now, also, big shout out to Maria and to the entire LA Token team for bringing VCTV possible. If you like what you hear, make sure you give us a thumbs up. Click Kyle Lekai, your host for VCTV. Let's dive in to fintech and blockchain. Gentlemen, welcome all to the show. This is a pleasure. It's Partner Monday. Woo! Excited that you all took time out of your day before your partner meetings to jump in to have a conversation with us and the audience about these topics and where everything's going. I know we've got a lot of things to talk about today and a lot of crossover with other technologies, whether it be AL, artificial intelligence, and ML, a new term I've just coined, AL, whether it be in bio and med tech, whether it be in space, AR, gaming, so much to talk about. Let's dive in. Gavin, first and foremost, welcome to the show. A little background, a little introduction on yourself.
Sure. Thank you very much, Kyle, and thank you to the LA Token team as well for inviting me on again. I was on about a week ago on an investing one, so that was pretty exciting, pretty illuminating. But happy to be here as well. So my background, for my sins, I'm a lawyer. I apologize now, just get that out of the way. But for the past 18 months, 2 years, I've been developing what I call an X-Tech consultancy. So X-Tech, obviously fill in the blank, whatever the X is, fin, prop, you name it. I'm trying to do a little bit in there, advising a number of startups, investing as well. And most recently, starting what I call a built environment technology practice as well. So this is any new technology platform and or product that's targeted towards a built environment. So I have quite a keen interest through my work with the UCL team and Alpesh as one of my I never said co-conspirators there, that's not right, co-committee members. And we're looking at a variety of implementations of technology for the built environment, but in particular, one of the things we're looking at right now is dealing with cash flow, which is a big issue in construction more broadly. Yeah, that's a brief potted history of me.
Wonderful. Well, since you already passed the torch, I'm going to continue to follow. Alpesh, welcome back to the show. Great to have you. I'll let you introduce yourself and a little background as well.
Hello, everybody. I'm Alpesh Doshi. I live in London, love tech, worked in blockchain for about 5.5 years after I met the Ethereum team. They shared our office for a couple of months back in October 2014. I love emerging tech, so blockchain is great. I'm a techie by background, working on building ventures. So we have a venture around data fabric and data AI, and ventures around custody and tokenization, where we see massive growth. And obviously we've seen hype and we've seen depression, and I think we're coming out the other side, but I reckon it's going to be 18 months to 2 years before really getting that scaled growth to happen. Apart from DeFi, which is odd, but hey, we'll talk about that, I'm sure.
Awesome. Well, welcome back to the show. Mark, my main man, the blockchain grandmaster from the Pacific Northwest. Oh. There you go. That's your intro for today. It's Monday. I'm having a little fun. So
okay.
Go ahead. Intro.
Oh, thank you, Kyle. I think I just grew a couple of inches. I think I'm feeling so much more important. I need you on a Monday morning, please. Absolutely. Yeah, Mark Eberstein, last name gives it away. Originally from Germany, but living in the US for more than 20 years. Here in close to Seattle. Most of my career in the interface between IT and business, and a retiree from Microsoft or a refugee, whatever you want to call it, 10 years ago. Started about the same time investing. I run a consulting company, wrote a couple of books about the impact of technology and business success during that time, and put my money where my mouth is. So invested in angel startups for about the last 10 years, now a little bit less than 10 years. I'm a member of the Alliance of Angels. Bill Gates' father founded it here in the Seattle area. We're investing in companies north of California. I'm a member of the Swan Fund. We're investing in North American companies. And I'm also co-manager of Codex 3. That's a group of angels and super angel investing globally in blockchain technology. So personally in the blockchain space since about 2014. And especially the topic about fintech, blockchain, how this has all come together is very close to my heart. So we have invested early in the Ethereum project on companies like X out of Indonesia and Singapore, took them to Davos, and then through my relationships brought them, for example, to the Fintech Ideas Festival. That's a conference for the CEOs of the largest US banks and insurance companies. They get together every 2 years. So you have to be the CEO of Wells Fargo to be there. And we brought a couple of our companies there as well and I was invited to facilitate the conversations about blockchain, how it's all changing. And it's really interesting to see between 2017 and 2019, and of course where we are today, how fast the adoption of the technology has changed. And I wrote an article about that.
Wonderful. Welcome back to the show. Steve, same to you. Welcome back. Also a little intro, a little background.
Hi. Thank you very much, Kyle. Great to be back again. Hello, everybody. So Stephen Kelso, I'm head of markets at Yva.ai Capital. We are an emerging market-focused multi-asset prime broker. We have a pretty big interest in specifically Bitcoin, but right across the digital asset space. We are an authorized participant in the BTCE GY exchange traded product. It's the world's first centrally cleared exchange traded product on Bitcoin, trades on the Xetra Deutsche Börse. We also do custody of Bitcoin within our FCA regulated broker dealer. So we would love to hear from you. Thank you.
Wonderful. And what was the name of the BTC thing again?
BTCE GY is the ticker. Trades on Xetra.
All right. That is a tongue twister, but nonetheless, I want to hear more about it. Noble, coming down from the stars just for today's episode. Welcome back to the show. A little background and introduction.
Hey, Kyle, good to see you. Yeah, my name is Noble Dracone. I run Dracone Capital Partners. We work in the startup space. We like gaming, blockchain, DLT, fintech. We just started a fund with our accelerator partner, M Accelerator. It's called M Accelerator Venture Fund 1. I've been in the space since I bought my first Bitcoin for $300 and rode it up to 20 and watch it go back to 9. So it's a space that I've been very excited to be a part of. And since we're really heavy in gaming, we've been really excited to see a lot of the kind of DApp games that have evolved, as well as a lot of the fungibility that the blockchain is doing. My background for the last 26 years has been in both the brokerage industry as well as running hedge funds. I've written several books on trading and investing. And so this space is really, one of the areas where, we went away from having tons of different currencies when the euro collapsed, all of the European currencies, to then seeing the blossom of all these different blockchain tokens and DLT. So for me, I think it's like a second renaissance for the industry.
Absolutely. And we're going to be diving deep into that here in just a little bit, along with on the gaming side. But last but not least, the man or the robot, it's still yet to be determined, but nonetheless, the grandfather of artificial intelligence, who I'm giving the title to, that's not necessarily an official title. There's an asterisk there. Gary Fowler, welcome back to the show.
Yeah,
Little intro, little background.
It's good to see all the friendly faces here today. What can I say? I've been doing startups and technology for over 35 years, and I just love artificial intelligence. My largest exit was with Click Software. I was on the original management team, sold in August for $1.35 billion to Salesforce. So that was a little company out of Israel that they took global. 4 years ago, I was on the co-founding team of Yva, which is an AI company that we started. Technology came out of Russia. It's about a $700 million company today. So, I love AI, and I also, in the space in blockchain, we need to talk about things like encryption and security and how we can retrieve that information quickly, and also keeping the AI straight with blockchain. So I believe that, as part of this digital transformation, which we talked about a lot of times on the show, Kyle, we're at the new age, and we got to transfer this data around very quickly. We got to make it sure it's very secure, and artificial intelligence gives us another key to be able to do that. So
absolutely. And happy to have you too. And with GPT-3, as you and I have talked about, and you've also written a really good article recently, just the mix of that type of artificial intelligence into the world of fintech and blockchain could be very, very revolutionary. It's something that we should look at embracing as it evolves, but also something to be mindful of as to what opportunities it can bring and maybe push away as well. But gentlemen, all welcome to the show. Excited to have you and dive into each of your subject areas, which is why I kind of want to start this conversation off today as to your view as to what's happening in these spaces. As we mentioned pre-show, and that's a very big question, so feel free to go big with it. But as we talked about pre-show, a lot has happened. Each of you focus in different areas. A ton has changed in the past 6 months. And if anything, we saw the digitization flourish or really accelerate beyond means. 2020 was already looking like a big year for both fintech and blockchain, but instead it turned into be a mega big year. And we're still just over the halfway curve and still have a few months left in the year, which anything's game on at this point with what we're seeing. I mentioned a few headlines of big changes that have happened just in the past week. It seems like week by week, more changes in this industry. With that being said, I'd love to hear each of your views on what's happening in both in fintech and blockchain as well. And Gavin, since you're the newest member and on my episodes here at VCTV, I'm going to let you kick us off with your view of what's happening in the spaces, and we'll go from there.
Wow. Okay, stars we mean to go on. I drop the new guy in it, I suppose, isn't it? Wow. Well, a lot. I not to sound trite, but a lot is happening, and a lot happens every day. I think there is beginning to be a little bit of a shift away from fintech-focused startups. Yes, there are still many out there, but I think on a practical view, you need to ask, how many different ways can you electronically pay for the same thing? Well, one, surely there's you whatever electronic version you have is how you pay for it. From a consumer point of view, do you care? Do you care it's MasterCard or Bitcoin or anything else that's behind it? No, it's just paid. You don't care. Yes, cleverer, quicker, snappier ways with better cybersecurity. Well, I shouldn't say cybersecurity, better security can always be rolled out. But I think it's, to an extent, it is coming to an end. But that means that all that talented focus, all that problem solving, all that clever software engineering mind is now being focused into other areas. And I've seen a bit of a takeoff in prop tech, certainly. And you can consider that fintech as a store of asset wealth. You know, why not? If you're tokenizing, and you mentioned tokenomics, if you're tokenizing assets, then instantly you're getting into consideration of a fractionalization of assets as well. So suddenly tradability of assets becomes a bit more interesting, liquidity increases and so on. So you beginning to see that. And I think certainly there's a lot more being applied to processization, and certainly using blockchain to validate and authenticate processes. Seeing a lot of work, yes, being done around real estate, but also in the integration of IoT with tech platforms. So I'm beginning to see a lot more blockchain used as the gatekeeper, if I can put it that way, intermediary to securing IoT devices, which is obviously eminently sensible. I could go on, but I'd be here all night. So I'll pass the baton to the next speaker.
Happy Monday, everybody. No, I think that's
Happy
a perfect
Monday.
example. We've talked a little bit last week around the idea of connected devices, and say idea because this is something that's been talked about for 10 plus years, and now it's coming to, right? Blockchain is playing a very good role infrastructurally to help connect those dots or connect those sensors, and also provide some of the missing pieces that Internet of Things was the dream of, but needed some kind of glue in between. So I think that's a perfect torch to pass. And, you know, Mark, I want to throw it over to you here. You know, continuing that, what further are you seeing in this space, whether it be from that IoT side that Gavin brought up so brilliantly, or if it's something else that you're seeing just generally shifting in the space?
I think the trend of all these technologies coming together and amplifying itself, I think we've seen this over the last, 30 years or something, at least since I'm in the space. So it's really hard, or it doesn't help as much to look at one technology itself. To really look at the synergies makes a big difference. I think in the blockchain space, and I think in the fintech space, especially, Bitcoin was designed for something that's happening right now, right? So you have an independent finance system there, but and I think especially the last few weeks, what we see with the DeFi system, looking at Ethereum and what's built on top of it, the assets that are right now in the DeFi environment, I think there's a lot of early indications that it's moving forward. But even going back a few years, I think I mentioned this earlier, the Fintech Ideas Festival, it's like the largest CEOs privately getting together a few times, or every 2 years usually. In 2017, blockchain had just started to reach their vocabulary. And in 2019, they had hundreds of projects within the organization because they could see the efficiency it brings by looking at working together across organizational boundaries. So I think the speed in which we see digitalization, digital transformation happening across all industries is unprecedented. It has been unprecedented 20, 30 years ago, and it's just accelerating over and over again. When we have seen it, of course, the last 6 months, we all work differently, of course. And it's one thing I think is we're never going back to where it was before. I think every time we make a new move, we have a mobile phone, we have remote work, we have the ability to transfer money much easier. The moment we're getting used to it, there's no way of going back to an old world. It just takes a while to get there, but when we're there, that's what the new normal is going to look like.
Mm-hmm. Absolutely. And Steve, I want to come to you on this. Stephen, apologies. Would like to come to you on this. I know you're kind of sitting on a different side, but you you're a lover of blockchain and digital assets, as we've talked about in previous episodes. So would love to get your thoughts as well. What are you seeing and happening in all of this space right now?
What we're seeing at ITI Capital is, we've got a background sort of 15 years plus, and many of the teams sort of worked together for many years before that. We see that digital assets are really an extension of the emerging market investment phenomenon. And so clearly, in this, extraordinary sort of prevailing part of the market cycle, we are seeing a lot of our emerging market clients really much sort of coming to us looking for access. As they look to us for access into traditional markets, they look for access into derivative products, they look for access for funding solutions across their portfolios of traditional equity finance, fixed income finance. Now they're looking to us for access into the digital asset domain. So as I say, we do custody of Bitcoin in our FCA regulated broker dealer, which kind of sets us apart. We are an authorized participant of this exchange traded product, which, as I say, very much sets us apart, because what this is all about is access. As we know, Bitcoin digital assets have been a retail investment phenomenon. As we know, the big COVID bounce. Of course, we're all familiar with the great Corona recession, but we have seen the whole response, the market response, and the market is always right. We've seen that playbook unfold at a much accelerated rate to what we did coming out of the GFC in 2008, 9, 10. So there is no debate now about the tools and the weapons of choice that the central policy makers can use. There is no debate now about the moral hazard of bailing out the banks. So it's natural that everything is playing out at this much accelerated rate. So for us, we've got a number of push and pull factors that are very much leading our institutional clients, family offices, high net worth individuals, wealth managers, asset managers, hedge funds. These are the type of people that are very much coming to us for access into this. So much as I say, platforms like Robinhood, giving fractional ownership to the big high value shares like the Amazons, the Apples, these multi-$1,000 shares, those have actually historically not been available for a large part of time to retail investors, simply because it's so much money. And when these retail platforms have given fractional ownership to shares, that has, I think it's fair to say, confounded many of the market wizards, particularly in the macro space, who were late to buy. And we've seen sort of hands go up from the great and the good of the macro investment hedge fund space, simply because this is what's new this time. The retail investor is making more of a difference to traditional markets. And of course, that is the whole heart really of a peer-to-peer network. That's kind of what we're talking about. So even in those most traditional of capital markets, we're seeing the same dynamics that we're hearing about from the other guys in the call. We're seeing that really sort of ripple out, and of course financial markets more than anywhere.
Well, and it sounds like you're seeing a whole new audience come into this in a big way. It's not just testing the waters, it's big, whether that's emerging markets or, as you said, like high net worth family offices. These groups that traditionally stay very private or move behind the scenes are now coming up a little bit more publicly, which is great to see, and also good for the industry's movement overall as well. And Elfish, apologies, Elfish, I want to come to you next around this. You're working in decentralized finance, which I know we're going to get to, but also on the custody side, digital asset side, there's so much of this that we've already talked about you're involved with. What else are you seeing, or what are you seeing from your perspective around all of this, both in fintech and in blockchain, as things have progressed?
So I've been in fintech, as it's now called, since 2001. And I've just a few years. Yeah, too long, unfortunately. And I've seen the waves of technology come through, and I've obviously worked in financial services and worked in blockchain. And what I've seen is the DeFi world is, I call it a bubble. They're in this bubble. It's not a bubble meaning it's a bad thing. A bubble meaning they're in their own world, doing a whole bunch of stuff around some really innovative stuff. doing lending, with Maker and a bunch of, it's great. I love the innovation. I love the technology. The reality is, how do you migrate that from the world that is DeFi into the real world to mass scale? And that's been the biggest problem around blockchain in general over the last 5 years, and also around how do you build the infrastructure and the core capabilities you need before institutional investors will go into scale. Secondly, how do you build the tools and capabilities? So, if you look at the blockchain landscape, there are hundreds of companies out there. And in the DeFi landscape, there's huge numbers of companies going. The challenge that I've seen, and I keep seeing, is that some core infrastructure pieces don't exist. So when we started tokenizing real estate 2 years ago, we started working on it and we had to stop. We stopped because the infrastructure didn't exist. You couldn't do custody. You couldn't do custody properly of a digital asset. You couldn't price the asset properly. And you still, frankly, Steve will know this better than me probably, you can't actually price a real estate asset properly. Still, in today's world, you might be able to price a Bitcoin, because a Bitcoin's a Bitcoin. But if you start pricing other types of assets, you need proper market data to be able to price it. There's a bunch of different pieces you need. And then obviously you need a tradable market. How do you actually trade, in this case, a tokenized real estate asset in the market? Where can it be traded? It can't be traded on Coinbase or Binance, right? That market doesn't exist. And because they're non-fungible, how do you build a non-fungible exchange, a non-fungible place to trade a real estate asset? So I'm optimistic and I'm positive about the stuff, and I love it because I'm in it. But what I look at is, how do we get institutional investors to scale to adopt this stuff? Now, you mentioned at the beginning the OCC saying that large organizations can actually do custody. Fantastic. I was waiting for that to happen. The reality is, who do you trust? Who do you trust with your asset? You're going to trust Fidelity. You're going to trust BNY Mellon. You're going to trust Northern Trust. You're going to trust HSBC, right? For your digital assets, they're the people you're going to trust. Now, Anchorage is in the US, and they've done well in terms of growth. But the reality is, unless these core infrastructure pieces are in place to be able to do the value chain of what traditional financial markets have been doing for 30 years, none of this stuff is going to scale. And that's my challenge: is how do you get there? How do you make that happen? So until, for example, there's a DeFi world here, and then you've got the mainstream world here, unless you can custody what DeFi does in the real world, it's never going to get out of it. It's never going to happen, because investors are too scared about the value chain, trusting their assets, doing valuation, being able to make sure their money's safe, all the things that Steve and Mark will know about. So for me, these are the key challenges that need to happen. And that's what we've been working on. So we're working on a what we call a decentralized custody network, where we see effectively custody, as I mentioned, some of the aforementioned companies, all going to need to build a digital assets network to custody assets across that market. That already happens. You already have custodian, the sub-custodian, the sub-sub-custodian. That already happens in the traditional market, but it doesn't exist in the digital asset market. Similarly, on the DeFi side, how do you build products which can be, in quotes, safe to invest in the general market? And what does a life cycle of that look like? What does a trading life cycle look like? Until that's also defined properly, again, you're not going to get mass market adoption. So there we go. That hopefully gives you a bit of a summary on my perspective.
I think that's perfect. I mean, we talked about this pre-show. I've been researching a lot in the infrastructure space for a couple of years now, and there's definitely still pieces missing. And mass adoption use cases was one of the big issues, and we're starting to see that change, as even Gavin mentioned as well. But mass adoption is that next big hurdle, and trust sits in the middle of that. And you're mentioning the idea of custody solutions. When you do go back to trust, do you trust the bank and the charter, the institution you've always trusted with your money, with your digital assets? You may not, because you don't know if or what they've done in the space, right? JP Morgan, for instance, has been one of the biggest, along with Fidelity, out there saying, hey, we're building, we're doing, you're seeing those results.
Yeah.
Others haven't. So do you trust them with that type of stuff? Do they have the infrastructure?
So Fidelity obviously has their own custody for digital assets, right? They're building their own, which is interesting because obviously they use third-party custodians for all the other assets they have. So obviously, and I've met the head of digital assets for Fidelity. I've met him. These guys are smart. They see a market opportunity, which all the other custodians, frankly, are really slow at, and the asset managers, and they've got a lead. I mean, they've got a lead because Fidelity has the largest institutional investors out there.
Right.
They're
also-
prepping to get all of these guys aboard with digital assets. That's what I would do.
And also a great marketing team to snag the name digital assets. You'll get a real clap, not an emoji. That's a really good clap.
Yeah.
So Mark, I know you got a quick comment, and then Noble, I'm going to come to you. So go ahead, Mark.
No, just seconding what Alpesh said. I think I did a call with the folks from Fidelity a couple of weeks ago on another channel, but I think they're definitely on top of things. And if you look at the history, how well they worked with Coinbase, how early they were in even mining, they know exactly what's going on, I think. And it's just making sure, as a traditional Fidelity customer, I would love to have some area of crypto exposure with Fidelity as well. But they have been very, very careful of how they're approaching it, I think. But I'm extremely aware. So don't mistake slowness for not an interest in what's going on. And it's not easy to build these things compliantly. So we're looking at a couple of companies in that space right now. I think the announcement comes out in a week or two. But there's definitely professionalism that is needed in the crypto space in general.
I hope it slips at some point on the show, but if not, we'll wait for it for next week. But you're right. I mean, we talked about this in the past. The internet was not built in a day. It took many years for the internet to become something that was not only mass adoption, but functioned. Let's put it that way, right? To our standards. And it's still evolving, but even with the fintech space as a whole and putting blockchain into that, there's so many pieces, and not to use a term that's commonly used, but building blocks. There's so many building blocks that are still needing to be put into place. This is not something that's going to happen overnight. We do the math. We've been at this for just over 10 years from hey, industry, we're working on this. It's been worked on for much longer if we break down really the idea of ledgers and just distributed ledgers, getting into custody. So all of this stuff has been worked on for many years is the point. We're getting there. It's good to see these types of progress. And Noble, sorry, Mark, I'm going to cut you out just for a second. I want to come to Noble real quick. Noble, your thoughts as well, because I want to make sure Gary gets in some, and then we'll come back around for the comments. So Mark, I apologize, but Noble, to you, your thoughts. What do you see happening from the gaming perspective to everything else we've been talking about?
No, I mean, you see, you hit the nail on the head. I built my first website in 1996, and I participated in, 1.0 of the web. And I really believe that blockchain, Internet of Things, AI, all are part of this Web 3.0 movement. There's a couple of things that, Alpesh and both Mark said that really, they really hit the head about how Fidelity has been stealthily moving in this space. But one of the biggest concerns, particularly for why this was, developed in the first place, was the idea of it being decentralized. DeFi means decentralized finance, that there's not one person in control. There's not one company in control. The idea of the custodian is almost the antithesis of why blockchain and the idea of decentralized finance exists. The idea was that it in and of itself, the blockchain is supposed to be the custodian, because everything is both visible and capable for everyone to see. And so the guy in Tanzania and the guy in Tampa, Florida is able to move their money, play around with the investments and do things. And it's clear to see across the board. So, it's kind of the idea when XRP came out, how much blowback there was in it being a centralized token. We have to kind of be cognizant that there's really two things running in parallel here. There's the idea that the traditional finance companies want to be involved, and there's the idea that the blockchain in itself should be the custodian of the transactions and the world to see. So it's kind of an interesting, tug of war that's going on. And that's why even the central banks, even though they want to do it, they're talking about doing their internal DLTs, distributed ledger technology, and not really being on the blockchain, so that when they issue the digital currency. But, one thing that you mentioned at the top of the hour, you said, listen, Ethereum 2.0 is coming. The core reason Ethereum 2.0 is coming, Serenity is coming, is because we're looking at Ethereum as being highly inefficient. I think one of the core issues is not so much just the custodian stake, but it's also the fact that it's just inefficient. Ethereum does 15 transactions in a second, whereas you have Visa doing thousands of transactions in that same second. So we're still at a bottleneck in the ability for the movement of this information and capital. So there's like a lot of, you said it, there's a lot of blocks in this idea of creating what the image of what DLT and blockchain looks like, as well as fintech and decentralized finance. I think that we as a group, and our focus is really on the idea that where do you have the least resistance and the least path of problems where everything is digital. And that's why we focused on gaming. We know that real estate's been struggling for a long time, trying to integrate with blockchain, but there's a lot of laws and regulations that have to catch up with that too. We had the whole issue with the collapse of mortgage-backed securities, in which they were literally throwing paper back and forth, creating these documents, but not having the proper paper tied up. So I think that, while there's a lot of movement and investment in all of the fintech space and the decentralized finance space, it just hits a lot of resistance with regulations and laws. And that's why I think over the next 5 years, we'll see this all finally coalesce into something that we can hold on to. But in the meantime, our whole entire energy has been in the gaming space, in which we're using digital assets to create them fungible so that people can trade them and sell them. One of the, I think it's $7 billion is moved back and forth in internet gaming, period, for betting. And DLT and the idea of the blockchain is really starting to integrate there. So there's a couple places that we're looking. We love Engine, EINJIN, which really allows the ability for replacement of objects in multiple games and being able to be codified on the blockchain so people can actually sell them and then put them in other games. So there's a lot of good places to be. But yeah, the rest of the landscape is just messy.
It is. And I think, you bring up the point about regulation and potentially seeing that change in the next 5 years. That's huge for our audience listening. I mean, the idea that something that huge can shift in 5 years is big. And a lot of this stuff is already in movement. We just don't hear about it as well, right? That's the very unique part about this, is some of us think that nothing's happening. We're the first to think about it, but really people have been working on these types of rules and regulations for years. And it's just about time to start bringing those to light as the technology is catching up, or to Elfish's point as well, is that adoption is starting to gain traction, whether that's at a mass level or growing towards it as well. Gary, to you, your points and thoughts around what's happening in this space, both fintech and blockchain as well.
Yeah, so there's 3 points. First point, I agree with Mark that, really the Germans have a phrase, Gestalt, the sum of the parts equal the whole. So tying this all together is absolutely important. And, the efficiencies of the system have to come, and it's happening today, whether it's IoT, it's security, et cetera. And Alpash is, on target in terms of where we are with the digital transformation. I was working with a company called Propi. We did cross-border transactions on the blockchain, because look at it today. Here we are, we're online, as we've talked about many times in Zoom, but what if I want to buy a house in China today? How do I go about buying? I want to buy a house in Maldives. Can I do it? And how can I securely transfer my money and do it very efficiently and not get rocked with huge costs? So being able to do those kind of cross-border transactions as part of this digital transformation, it's critically important that we increase the efficiency of the system. The third point I want to make, and we haven't talked about it yet, I wrote an article in 2017 with the former chief security officer at Apple. And I have some serious concerns about it, because we look at the blockchain, but I'm not seeing, if you look at the transactional part of the blockchain, yes, it's encrypted, but when you get those private keys, it opens up, and there's a lot of data that's been stolen. We need to take artificial intelligence. As you know, I'm a proponent of AI, and we've got to go down through, and we've got to use a combination of being able to deal with the encryption with artificial intelligence. And if we don't start doing it, we're going to have a lot more data loss and a lot more challenges to the system. So 3 things: bringing it together, 2, the efficiencies of the system and digital transformation, and 3, security. We need to focus on security.
I think you're right. I mean, security is probably the last thing most people talk about when the word blockchain comes up. It's also the very first thing that people talk about when fintech comes up. So it's a very interesting gap in that. And you throw AI in the middle, let's hope for the best. I mean, more than us on where that plays, but it is very unique how those sit on very opposite sides of the spectrum.
You can take the AI can deal with encrypted keys, right?
Mm-hmm.
So you can deal with encrypted keys with artificial intelligence. You don't have to open it up. You're lessening the chance that somebody's going to steal that information. That's where it is. That's a very cool startup idea, by the way, because I don't see a lot of people in it.
Free idea for anyone listening. And Gary's the one to talk to if you do it. Alpesh and Stephen, do you guys have anything else to add on that around the security? I saw both of you shaking your heads. Any thoughts or further pieces around security?
So, I mean, on the security front, one of the biggest challenges is, the biggest challenges have been around key management. Key management is one of the biggest issues. Now, there are a bunch of startups that have emerged in the last 2-3 years to say, well, we don't need keys anymore. It's a pain in the arse managing keys and managing keys securely. And people have tried hardware stuff, software stuff. And I'm sure, some people on this call will know some of the companies that are out there. The thing about security is a technical problem in the sense that trying to figure out how to manage keys better is a basic, but that doesn't give you custody. So one of the big things I've seen in the marketplace is people say, we do custody. What they really mean is we do key management. They don't do custody, they do key management. We're two separate things, right? It's two separate things. Custody is not key management. And there's a there's a big misunderstanding, put it that way, in the market from my perspective, that those two things are the same thing. So I just wanted to emphasize that security is important. It's not just about key management. And custody is not key management.
Yeah, and I think that's a good segue. Go ahead, Gary.
Yeah, Alpesh. I think what you're talking about is dealing with the data in the encrypted state, not having to have a key. I think that's what you're talking about, right?
Well, I don't want to start solutionizing right now, but that's one of the Achilles heels of blockchain is having keys and wallets, right? This is a long conversation in terms of what solutions are out there, but
it's very interesting.
But it's a good. I'll interrupt in between both of you because it's a good conversation. I mean, for the future, it's a good conversation that needs to be thought through for many reasons. Thinking about this on a mass adoption scale, that needs to be solved. It should not be a question, right? Going back to choosing your bank of where you want to put your money or where you want to put your assets, it should just be choosing. You shouldn't have to think.
It has to be seamless.
Thank you. That's why
you don't need to know it's there. You don't need to worry about keys are managed. All you need to know is I log on and I do it and I'm fine. And that's it.
And it's safe. The only thing you want to know is it's safe and I'm going to know my money's there when I want it, right?
Yeah.
Seamless.
It's not going to disappear when you lose your key.
Yes.
There's a really wild video I'll share with all of you. I actually watched over the weekend around hyper reality. It's called hyper reality. Hyper-reality.co, I think is the web address. But anyways, this director painted a picture of the future and plays in all of your worlds, and Noble will love it, of AR and gaming and this connected world that we're living in. It brings in the idea of digital assets. And as the computer, this woman is walking around, the main character, things start getting glitchy. Not really sure what's happening. And the first thing that comes question of her mind is, what's happening to my credits? What's happening to my assets? Where are they going? Are they safe? Are they safe? Are they safe? Turns out they all get wiped away. Sorry, I ruined the 6.5 minutes for you. I apologize, audience. But nonetheless, it's still really good and visually stimulating. You should watch it. But to that point that is a question. That is the future. When it comes to the future of fintech and digital assets, all of us have that question: is seamlessness and safety. What is going to happen if things don't go correctly? So with that being said, let's go to the next big section of today's conversation. What does the next 2 to 3 years hold for fintech and blockchain? We can look a little bit further into the 5 years, but let's look for the next 18 to 24 plus months. Where do things go? A lot has happened in 1 week in these two industries. And a lot is a minimal way to put it. It continues to change so incredibly aggressively. And my prediction is that in the next 5 months, you're going to see a couple years worth of innovation happen. And in terms of it changes, in terms of releases, in terms of potentially early adoption as well. I'm ready to be challenged on that. Game on. But nonetheless, what do you guys see as to really what's going to be happening here in the coming 18 to 24 months and maybe a little bit further beyond? Mark, I'm coming to you last. Gary, let's start with you. You're already unmuted.
Yeah. So, I mean, we've talked about this, right? So I think in terms of these robotic processes, the security being installed, being looked at, being able to understand that we're going to have a safe environment for these transactions to take place. I think what's going to happen is we're going to be talking more about transactions like Propy, which is a cross-border transactions, things that are now safe and secure, sending money anywhere, anytime that I want to do it in a safe way. I think that's going to happen a lot. So it's really this whole digital transformation has also put a fire underneath anything with fintech and blockchain to be able to make things move faster. And we're going to see that happen. You can already see it. I mean, you go to the bank, look at the reduced hours. I mean, they're forcing you to do online banking. They need to have more secure systems in place to be able to do it. It's already started. COVID has forced that to start.
Absolutely. Alpesh, you're already unmuted, so go for it.
Yeah, I mean, so, what makes change happen faster is a market event, a market change, something that needs, something that's going to drive change because of a market need, right? So I'm extrapolating, I'm guessing, right? But let's assume the real estate market, COVID has changed the way people are going to work. i.e. they're not going to spend all their time in offices. The home working is going to definitely transform. Now, if you imagine the real estate market and you look at how, real estate is a huge business, commercial property is a huge business, right? So if you look at the market dynamic, all real estate is going to get devalued, or commercial real estate is going to get devalued. Obviously, logistics is not, because that's going to grow. But commercial real estate, office space, massive devaluation of the market. Well, how do you shift a business model? Well, you could look at tokenization of real estate asset. That could provide different investment vehicles, different investment products that you could create on the back of it. Obviously, the ability to refinance your portfolios could happen as well. So that's one of the other things, because frankly, interest rates are so low. If you've got debt or equity anywhere, refinancing it, frankly, makes sense right now because interest rates are really low. Mm-hmm. So if we look at the COVID stuff and look at real estate, look at the changing nature of people working, I feel that, in the next 2 years, you might see tokenization of real estate actually take off. As long as there's a compelling use case out there, and I sort of see one, but I'm not necessarily, at the moment it's remediation. All the real estate asset managers and all the property firms are looking at remediation. What the hell is our strategy is what they're looking at. Mm-hmm. That's their problem. They're not thinking about, well, how do we tokenize? They're thinking about how do we, so I think will come. I think the refactoring of the real estate market is definitely going to increase the need for tokenization and therefore digital assets.
Stephen, I'm going to come to you. I mean, Alpesh teed it up for you. Are we really going there, or what do you see is going to happen in the next 2 to 3 years from the digital asset side?
I absolutely agree with a sentiment that necessity breeds invention, and also I think the push and pull factors have been accelerated here. We've heard about the entrance of names like Fidelity and the personal career risk from advocating digital assets. It's in a different place to where it was even like 12 months ago, let alone sort of 3 years ago, when everybody was still talking about the Silk Road. I remember when people were talking, with sort of raised eyebrows about these money transfer businesses that were coming in. Of course, that is fintech by and large for many people, of course, today. So too, I think that we've got two very powerful gravitational pulls for Bitcoin specifically at the minute. One from this whole sort of precious metal space that, of course, has been accelerated by the declining US dollar. But I would actually argue that certainly, during most of the time I've been looking at it in a serious way, Bitcoin is actually traded more as a risk-on asset, i.e., along with equities, and of course we've seen the whole rise of the tech space. You know, as sort of mentioned earlier, if you've got any appetite for assets that are off the charts of fundamentals and have the price action has already gone parabolic, well, there's always a risk management argument for diversifying a little piece of some of these big tech names into something that has gone parabolic and has spent the last 3 years consolidating to levels of 50%. So the market forces for me are pretty clear. The risk reward of the personal career risk from those involved in the markets is also, it's in a different place to where it was. I think, you know, we've seen the great and the good of the big strategists and chief economists at many of the big banks, you know, particularly JP Morgan and Morgan Stanley, like their economists, they were right out of the blocks, hit it hard, called it absolutely correctly, in my opinion. And, you know, people, this whole return of inflation argument for people like me who've got the gray hair, the gray hairs and the bald head, we've been around for so many years in markets, you know, it's a very relevant dynamic, this whole return of inflation. Nobody's expecting it to kick in anytime soon, but, you know, 18 months, 24 months forward, you know, there's a very real strategic place in portfolios here. You don't have to go to the sort of modern portfolio theory. You don't have to follow the endowment model to see the benefits of that.
Good news is we're all working from home, so none of us have gray hair. We all have beautiful, flowing, whatever color you want, whatever style you want. Well, Elvis, you don't. It's just it's the look. I get it. It's the look. You put it together. You know, Zoom backgrounds do wonders for everybody.
Maybe I'm respectable. Look, respectable.
There you go. See, you're well established. There you go. So with that being said, Gavin, thank you, Stephen. Gavin, to you. I mean, where do you see this going? You talked a little bit about prop tech. You talked about construction, which, I mean, the entire back office of those two industries as well, I can almost believe are going to get accelerated and digitized in the next 2 to 3 years, leveraging blockchain. I've seen a number of protocols, methodologies, including Baseline and a few others that are out there focused on the back end of these things. You've got the traditional ERP systems that are coming in. Stuff is happening. Throw in IoT. Let's roll the dice. Let's hope that this really comes together in 2 years. But what are you seeing happen in the next 2 years?
I think in many ways it's a practical question. And looking at if we can call it, say, post-COVID or post-coronavirus, whatever era you want to call it, a lot of it will come down and be driven by what governments decide to do in terms of the stimulus programs that they put in place. And there is an example. So the UK government has put aside, I think, £5 billion for investment in the built environment. A lot of that is targeted at technology and technology solutions for the built environment. So if you suddenly have a lot of effectively free money available, that will begin to dictate, necessity being the mother of invention or money being the mother of startups, will dictate what they do and how the technology develops. And I certainly see crossover with blockchain and IoT. It's inescapable. It's the obvious next step to creating digital representations of the real world, which is ultimately the next step in, I don't know, the web of everything, internet of not just internet of things, but almost a web of everything. And that's my instinct is certainly down that practical solutions and solutions that give people jobs in a very crude basic economic requirement. You certainly don't want people sat at home doing nothing because they were let go from, I don't know, their manufacturing job, their restaurant, hotel, hospitality job, whatever it may be. And I do see problems with the fintech space. If I can just cast a storm cloud on an otherwise very silver-lined discussion, I think the regulators are playing catch up. And my concern is that they'll begin to take more interest in, particularly in tokenization of assets, and particularly real estate. And I know the Procre example, and I think it's a great example, international property deal settlements, shall we say. I think that might come under more scrutiny, because certainly regulators will begin to say, well, where's this money coming from? Where's it going to? Can you show me? And can you demonstrate you're compliant with KYC, AML? I forget what it is in the States, counterterrorism funding, no, something like that, CTFC, I forget, too many acronyms. And there will also be a question, if assets are tokenized and then fractionalized and then sold, there's a lot of question marks around, okay, who owns all those fractionalized tokens, and can you demonstrate in any sort of ledger who owns that at any given point in time? And you would have to be able to do that for certainty, asset ownership certainty. Governments don't like uncertainty. They don't like any sort of question mark. So as soon as you start introducing them, even though it's a fantastic solution and it resolves liquidity problems in the markets for illiquid assets, property being a great example, regulators will become nervous because they don't have the tools to deal with this new reality. I agree with Alpesh as well, the drop in commercial real estate value, but that in and of itself creates a problem for the banks who are backing and own the debt of commercial real estate. So now you've got another problem, and have you got another banking crisis, and now the bank's going to turn around and ask the government to be bailed out yet again? Well, I think Steve mentioned that the moral hazard in all of that, and I'm not so convinced it is resolved, because will the taxpayer stomach yet another bailout? And you come back to a problem of too big to fail. Well, right. If you're too big to fail, surely you're too big. The logic of that statement is surely clear. So you've got a lot of problems on that side. So then you have to put that to one side and say, okay, what can we positively do? What can we proactively do? And you come back to the practical solutions for, addressing whatever stimulus package the government's put together.
Well, and technology, I mean, let's looking from the technology perspective, I think that's where you were saying like technology comes in. So the whether it be blockchain, whether it be the Internet of Things, there is a technology component that plays a very big role in pending crisis situations. I'll just say that because a lot of things infrastructurally, as we have talked about, need to be advanced, right? They're a little shaky at the moment, and I think you're bringing to light a few others as well. And Noble, I want to come to you. I mean, gaming, blockchain, fintech, super quick. I apologize because we're coming to the top of the hour, but where do you see things going in the next 2 to 3 years?
No need to apologize, Kyle. These conversations are so good, and I learn a lot. You listening to Alpesh, love listening to Mark. It's a really good opportunity for all of us to kind of talk on this topic. I think that the core of it is we're overly Western focused in our assessment of what DeFi and fintech really looks like. The same thing when cell phones came out. The reality was, we're fixated on 5G and 3G, but realistically, Africa had no landlines. Africa is one of the largest growing markets in the world. And immediately they adopted cell phones faster than anyone else. And to be frank with you, they already were using bank transfers on cell phones in the 90s. This is, part of their culture. Of the top 10 countries who have adopted cryptocurrency, 5 of them are in Africa, South Africa being the largest. So I think that a lot of our attention is really focused on the Western world and the Western infrastructure, rules and regulations. But to be sincere, the countries in Africa haven't even caught up technically at all to what they imagine what cryptocurrency should be. And in fact, the people are driving the adoption. And so I think that when we look at the fintech, and especially in the next 18 to 24 months, the real world issues that are dealing in what we consider third world countries are forcing the rest of the Western world to pay attention to how important this is. Countries are dealing with hyperinflation, regardless of whether the dollar is running into stagflation or is losing some strength. All throughout Africa and parts of Asia, their currencies are completely tanked out. And the flight to safety used to be gold. I've been a trader for 26 years. Immediate flight to safety was gold, silver, and those have kind of almost plateaued. Yeah, there's been some movement in gold, some movement in silver, but back when I started in trading in the 90s, these would be actually in the $5,000 to $10,000 range. In fact, the introduction of cryptocurrency has diffused all of that concentrated pressure that precious metals once had. And so in the next 18 to 24 months, I believe all of the leaps and bounds in adoption in both decentralized financing, cryptocurrency will happen primarily in Africa. And that will actually set the stage for how people want to regulate. And it's telling because as they adopt, the global world, who's kind of been shut out, really the only way to invest in Africa for years, since colonialism, was you had to fly there. You had to literally have boots on the ground and interact and operate with people. The fractionalization allows individuals, and tokenization of an entire continent's economy is going to allow everyone else to participate. And so there will be a new renaissance that will start within the next 18, 24 years in places like Africa. China made the first step, but cryptocurrency and decentralization is going to allow everyone else to participate.
Yeah, and China and Asia in general is making some huge strides, and it's no longer just headlines, it's action. If you haven't had a chance to check out the 145-page blueprint they released recently from out of Beijing on what they're looking to do in the next 2 years as a blockchain hub. There's 12, I think, give or take, actual use cases where they have tested things, they have real insights and metrics based on. It's just a tease of what's to come. And you look at Project Ubin, I'm calling out two very big announcements that came out that are pretty fundamental. Project Ubin with JP Morgan, Tessamic, and also Singaporean government. That rolling out commercially is another good example of like these things are happening. And Mark, I want to come to you last here. Your thoughts on the next 2 to 3 years as we come out looking at these technologies. And I want to come around for everyone's closing thoughts. Go ahead, Mark.
Just building on top of, I think, what the folks already shared here. I think Bill Gates said at one point, we are overestimating what the change that's happening in the short term and underestimating the change that's happening in the long term. I'm not sure right now if that's completely correct still. But I think Gavin made it quite clear that we are going to see change in governments and financing and how big organizations work or can work. I mean, I think that's happening for sure. Noble, you are absolutely spot on. We need to look at areas outside of the core Western world for innovation. I mean, I've seen this in the early 2000s. I was in Japan when they did smartphones on their subways, and I told my friends here at Microsoft that this is the future. I said, "Oh, no way, we're not thinking about it." Like if you think, Kyle, you are asking about consumerization. What's finance look like? Consumerization of IT keyword 15 years ago. It's happening in finance as well. You look at Robinhood on one side. But look again, as Noble said, look at China. WeChat became not only a payment structure, it's the way you're doing financing, you're doing insurance, you're even doing the advertisement and reward program. All of these things are coming together, and it's usability on one side. And then going back to what you said earlier, security, it's so critical. And for our consulting business, our key customers, what do they invest in right now? Not ERP, not supply chain management, it's security, security, security. That's on the top front of everybody at this point.
Mm-hmm. Something that's no longer just in the boardroom, as we've said before with blockchain and other technologies. These are now forefront things that have to be there, whether it become with data privacy, data management. This is now a data-driven world. Gary's love is here. This is a data-driven world. That the stuff needs to be protected in some way, shape, or form. That being said, gentlemen, we have crossed the top of the hour. I'm making you late for your partner meetings, including mine. That's okay, because this is too good of a discussion. As Noble said, we could go on for hours, but let's wrap up here. Quick closing thoughts. And of course, as we do here on every show, where can everyone find you online to continue this discussion? As Noble said, we could, again, talk for the next 4 or 5 hours about these subjects, but I want to make sure we do get to wrap. So Mark, quick closing thoughts, and where can everyone find you online?
Easiest way to follow me is on Twitter at Mark M. Eberstein. Very simple to find. If you find me once, you can stick with it. I think we are seeing a lot of opportunities emerging, like we did in all crises and challenges and big transformation opportunities. So we are looking for those as well. Please stay in touch, and I'm happy to help the next generation of big entrepreneurs.
Wonderful. Stephen.
Hi, yes, it's Stephen Kelso. So it's steve.kelso@iticapital.com. I'm also on LinkedIn. Great to hear from you. Thank you very much, Kyle, and everybody.
Wonderful. Noble. Oh,
Yeah, sorry about that. Yeah, so it's easy to find me on LinkedIn. Noble Dracone. Mark convinced me to start giving out my Twitter handle, so it's just my last name, Drakoln. So at Dracone to reach out to me, and I think that this is the place to be. I don't think the payoffs are going to be the way people assume, but immediately. But it's one of those things that 20 years from now, it'll be a drop in the bucket as far as thought. These conversations will long be resolved.
Absolutely. And that being said, I think GPT-3 is going to drive them all. But Gary, closing thoughts, and where can everyone find you?
Yeah. So, I was at the beginning of the e-commerce revolution. We built the websites for Delta and American Airlines. I started one of the first consulting companies. This is very similar to that exact time. We were having these exact discussions then about how things were going to change. So what we know is going to happen is that we're going to deal more globally. We're going to be much more efficient, and we need to be a lot more secure than we are today. So people feel safe about making those transactions. So the digital transformation is among us. You can reach me, Gary Fowler, at LinkedIn. I'd be happy to do whatever I can to help, and go out there and get them. Stay positive, and the glass is half full. Thanks.
Get shit done.
And get
There
shit
you
done.
go.
That's always get shit done.
I'll finish it for you. Gavin.
Thank you.
You're welcome. You're welcome, Gavin. To you, closing thoughts, and where can everyone find you? I know there's a lot, by the way, of our audience that's looking at the construction and prop tech space. So it's good to know where they can find you to connect with as well.
Sure. LinkedIn, always the best. Just search my name. I'll probably come up if I can be so narcissistic as yesterday. Otherwise, my company, Agenium, Agenium, I can be reached through there as well. And I'm happy to obviously have a call, just have a chat, a coffee or whatever, and talk about any brilliant ideas you've got. Final thoughts. I think there's a lot of opportunity out there. There's a lot going on in the tech space generally. It's a very exciting time, and there's almost too much. There's almost too much that can be done. So find your particular brilliant idea and run with it, because you just never know.
Absolutely. Focus. Last but not least, the DeFi master, the custody of custodies, Alpesh.
Hey guys,
closing thoughts. Where can everyone find you?
I think the key thing for me is, in all of this happens around blockchain and in AI, what I've learned the hard way, it's about use cases and scaled adoption of use cases, whatever they are in whatever market. Unless you get that, it doesn't matter how clever the technology is, it doesn't matter how clever the idea is, it won't work. So GPT-3 is interesting, but how much of that is going to get adopted to scale to make it, in quotes, mainstream? So for me, that I've learned the hard way and failed too many times about trying to anticipate the future and build stuff wrongly because I've called it wrong. And so now I'm frankly being a lot smarter about finding the right use case, getting the customer traction, and then scaling. So that's it for me. I love all this exciting stuff. I love technology, but that's what I've learned the hard way. And you can find me everywhere at Alpesh Doshi. There's another guy called Alpesh Doshi who is a gynecologist. That's not me. But otherwise, at Alpesh Doshi on Twitter, Alpesh Doshi on LinkedIn and Facebook and all sorts.
There you go. Well, there's only two. You got a 50-50 chance, everybody. It should be easy to find them.
We look different. He looks different. So he doesn't look like me. He looks something different. So he's I'm not going to say.
There you go. You got to, if you find one that's focused on blockchain and DeFi, you've got a visual right here. You can find them. Nonetheless, gentlemen, thank you so much for joining today. To our audience, thank you so much for tuning in wherever you may be, whatever screen you're watching on. We greatly appreciate you joining in on VCTV. If you like what you heard, click subscribe. Please give us a thumbs up. We'd also love to hear from you. Feel free to reach out. Founders, get in touch. You'd like to pitch us as investors, you'd like to share your insights and knowledge as what you've learned to give back to the community, let us know. We'd love to have you on Startup Leaders Club Investors. We'd love to have you share your insights, your thoughts, your brilliance on what's happening in different technologies, markets, regions, and industries around the world as well. Again, give us a shout. And also a big shout out to Maria and to the entire LA Token team for making VCTV possible every single day, no matter what. Monday through Friday, we're here. I'm Kyle Lacotte, your host. As I said, a lot is happening in the space. Our guests continue to echo it through. Find your focus, get shit done, as everyone has iterated as well. We'll be back here tomorrow. We've got a full week ahead. Also, big shout out to Holland Valley outside of Atlanta, Georgia, for their coffee, getting me through this Monday morning. Really appreciate everybody. Again, Kyle Lacotte, your host, signing off. We'll see you back here tomorrow. Thank you, everybody. Thank you, audience. Bye.